The calls for breaking up big tech are getting louder as the House Judiciary Committee is launching an investigation into Silicon Valley's former tech darlings. The fears are front and center at the Code Conference going on right now. Take a listen to the head of Instagram.
If we split it up, it might make a lot of my life easier, and it would probably be very beneficial for me as an individual, but I just think it's a terrible idea. I think it depends on what problem you're trying to solve. If you're trying to solve election integrity, if you're trying to approach content issues like hate speech, and you split us up, it would just make it exponentially more difficult, particularly for us on Instagram, to keep people safe. Right now, there are more people who work on integrity and safety issues at Facebook than anybody who works on Instagram.
And YouTube CEO warning that heavy-handed regulation what heavy-handed regulation may do to the company.
I think what we have seen is that a lot of times regulation is really well intended. People want to change society for the better, but it has all these unintended consequences. And so what I would say is really important is for us to be able to work closely with these different providers, the different governments, and be able to explain how can we really implement it in a reasonable way, how to make sure there aren't unintended consequences that they didn't think about.
Well, breaking up may be hard to do, but one analyst says that is not the case for Alphabet. That brings us to our call of the day. A note out by Needham says the tech giant is too cheap right now, and the stock could actually surge 50% if the government stepped in and forced it to break up. So is big tech maybe better off splitting up? Dan.
Well, I think big tech, knows that the genie is out of a bottle for all those issues they just talked about. What do you want to regulate? Are you trying to kind of secure our election system, that sort of thing? Those are two separate issues. But if you kind of regulate and break up these companies, the sum of the parts, I think this is what this analyst is saying, might be worth than what they are. And it's going to really stifle innovation. And I think some of the smartest tech investors will all line up and tell you that if you do that, then basically these companies are just going to start buying little or smaller companies. They're going to be, once again, trillion-dollar market cap companies with huge moats. So at the end of the day, I'm not sure what breaking them up really does, and I think it probably makes it harder. It makes a lot more entities that have to be at least watched by the government.
Do you think Alphabet would gain value if it broke up?
I do. I mean, well, for one thing, the ridiculous pile of cash would be completely naked, right? So they have to do something with that. Maybe they distribute it among those companies. But also, I mean, who knows what YouTube would get, right? Who knows? Who knows what Waymo would get if you look at Cruise or, I think, yes, it definitely, to your point is a different one, is on whether or not it stifles competition. I'm just looking at it as a shareholder, I think it would unlock value.
Right. But when you look across big tech and the big tech that's under fire, not every company can break up so easily, I would imagine. I mean, an Apple, I would think, would be much harder to break up in terms of the services business and the hardware business because they feed off each other. Maybe Facebook the same way, perhaps because of the platform that ad buyers buy into. I'm not sure. What do you think?
No, I agree. I mean, Apple has such a strong ecosystem. You have to keep that company together. But when we're talking about the sum of parts valuations and how if you strip out all the different parts of Google, it becomes worth more. What they're not taking into consideration is the synergies that exist from it being one company, right? So as soon as you start stripping out the different businesses and applying a higher multiple to them, essentially you have to subtract out the synergies then as well. So is it really worth any more?
Right? They have their whole pile of money losing bets that's already mixed in, right? So you have actually I think you have a subdued multiple versus what you would have.
Because of the moonshots.
Yes.
Yeah.
The incredible thing for Facebook is they've got the money. We know they have the money. All these companies have incredible cash hoards, right? But they went out there, and Mark Zuckerberg, they've already taken the hit from when he said, and I remember sitting on the desk with you, Mel, the night that they decided how much money they were going to spend to put themselves in a position to be able to, from the regulatory standpoint. So I think it's really interesting that they've got the money to do it. If you spun out an Instagram, I think that the valuation there would be far higher than people would ever guess when you do this sum of the parts sort of a deal. But it's still this company that's got this incredible moat. So what do you really want to do with these companies? And are they really using what they've got against everybody else, or does the competition just have to get better?
Yeah, let me make one other point about Facebook. When you think about their earnings growth and what's happened since July of last year, we know that earnings were expected at that point. A year ago, earnings were expected to grow, 20, 30% or something year over year on 25, 30% sales growth. What's happened? Sales are still expected to grow 25% in 2019, but earnings are actually expected to decline year over year. So what has happened? They've guided down. That was one of the reasons why the stock cratered in the second half of last year. Analysts have taken their estimates down. They have started spending money to kind of get more in line what they think the future looks like here. And at some point, this stock trading at 20 times, if whatever regulatory action comes out and they're already prepared for it, this thing could be a moonshot to the upside. I'm just saying on valuation.
Was going to be I'm sorry, not the net pre-tax margin was going to be worse than it actually is going to be. That the SG&A is actually coming in.
It
better.
clearly could do. What did we see earlier this year when they guided expenses lower than what people expected? The stock rallied 15% in a straight line. So I think investors are getting to the point where they think that estimates are probably low enough for what is likely to come down the pike as far as regulation, what this company has to do. And we've been saying this, and I know Tim used to write all these op-eds last year, just writing op-eds left and right. It's coming for Google, and that's one of the reasons why Google is really underperforming right now. It's a timing game, so ultimately I think estimates are probably going to have to come down for your and Tim's Google.